How is it going, guys? What did you do? I go to sleep for just a few hours, and when I come back, it's freaking apocalypse. Apocalypse. The freaking zombies are coming. Everything is freaking falling apart. But joking aside, what a interesting day today. I went to sleep somewhere here. I thought, okay, we've reached that 61.8 Fibonacci level. In hindsight, I can see a lot of things like, oh yeah, in the back of my mind, I was like, oh, this is probably going to drop more or whatever. I'm not going to say that, but uh, you know, uh, I should have probably waited and see if this, starts to actually hold levels on, say, a higher time frame, like the 30, which it never did. Like here it did it did bounce, but what we would have wanted to see for like a proper bounce from here would have been like 1 or 2 30-minute candles actually hold that level here, which it didn't. And I should have waited for that, but I was tired and I'd had a good day. And the sad thing is to say that I had all the shorts that I called out yesterday, like Amazon and Take Two, and what was the third one? Let me look at the list yesterday. Autodesk. I covered all of them when I went to sleep. It's like, oh yeah, you know what? Let's take profits. And because of that, like my portfolio delta snapped around and became bullish. Just like if you take short delta off, and we are going to explain that concept to you in the future. But just for you guys who know, if you take short delta off your portfolio, like the long delta start overpowering the shorts. So I took off a little bit too many shorts, which made me, made this only an average day in the end today for me, because it just went against me a little bit too bad on this drop. But what I did not panic. I bought just like short term expiration, like actually 26th expiration SPY calls in here. And I also, the one thing that I still had on was UVXY calls. So if you look UVXY, it's the triple leveraged VIX ETF. So whenever the VIX spikes, this is like like just triple leveraged product. If you look at it, that's another thing that we can cover at some point. Like it keeps, because of the way they roll the contracts, because this is based on the, actually I think it's not the VIX, it's the VX/VX futures. But the way they roll the futures, like there's just a little bit of drag in the product. But when we have sell-offs, that's when it's really interesting to trade this long. And then also, it's really interesting to like just keep on shorting it when we are not panicking. Because when we're not panicking, this just slowly fades no matter what the market does. So what I still have is just a few UVXY calls. I think they're already, let me look at it real quick. There might be already in the money. No, not yet. So I have the 1850 calls and then the 23 calls, just in case we go completely crazy tomorrow. But they are both those positions are profitable already. So even if we drop today, I mean, if the SPY recovers today, they're still going to be quite profitable. And it's also just like my last insurance policy for whatever may come. But yeah, to get back to the market, yeah, the list today is short, by the way, because when stuff sells off like this, everything's correlated. It gets even more correlated when we get like super crazy like today. So it doesn't make sense to look at stocks and where to play the bounce or whatever, because I'm just going to play the index. and it looks like we are recovering a little bit now, which is great for my calls. I got 314 calls. I took them right at the money. Tomorrow is expiration. Then I also have, let me just bring it up so I am telling you the truth. I'm bringing it up on my screen. I'm not going to show you guys my account, but I have like some further dated out like end of the week, the 320s, in case, like the bounce, if this was already the complete sell-off, they are, if we get up into 320, this is going to be like a 500% play, which is awesome. And what I also started doing, as I alerted in chat, I've started buying, further dated April 17 monthly, April monthly expiration calls, like further out. And I just bought them cheap. I bought the 330s. I bought the 335s, and I bought some like really far out the 340s. Just like this is not a large position whatsoever, and I'm looking to build more if we sell off more. But for now, that's just, like I'm taking opportunity now to buy more, to get more long, and we'll see if it's going to pay off. I don't think that this is the beginning of the recession. I'm going to keep saying that. I think this is a new kind of symptom that we've started seeing in the last few years, where the market is getting really nervous, and I'm not sure whether it's institutions or whether, like um, the topic of, just buy and hold has been hammered into people's retail investors' minds a lot. So I am wondering how strong the influence of retail people dropping out on stuff like that is. Who, people who are not educated in the markets and are, like losing their nerves and are just hitting market sell orders when we sell off like this. And that's like just a symptom that I'm seeing recently. Like we don't seem to get like proper, like corrections anymore, apart from perhaps, like this. Even this to me was more volatile than a proper bear market would look to me. I've To be very frank with you, all I can see from bear markets is what I see. Like historically, I have never been through a bear market myself, but like um, it just looks different, apart from, I mean, this is the, like that's where everything broke, but it looks different. It's not these sharp, like sell-offs. It's just a trickle, like it's just slowly fading, or just, like um just it's slower, it's less volatile in that sense. So, you know I don't think we are going to go much further on this sell-off. Perhaps, like in the next few weeks slash months, if we recover and don't get back up into the highs, and then slowly start, like fading down, that's when hopefully, I'll get like that kind of behavior that we are thinking about. But so for now, it's just, I hope I'm making sense. I feel like I'm rambling because all of this stuff is just, like I'm not writing any of this stuff down. I'm just saying it as I think it. But um, what was I saying? It's these sharp sell-offs. They usually get like, like quite sharp bounces as well. So I would not be balls deep in puts right now. And I would be like, I hope some of you guys have covered. So, but what I want to look at now is levels. So we've had this, like this rally that never ended, apart from, like just a few blips. And so what I'm looking at, and I looked at this yesterday, is the Fibonacci levels. I pointed this one out. So now we're under, and it's interesting that we stopped right at the 50% mark. You know, you guys, though, the fundamental investors and whoever else, they can tell me what they want. I'm sure they have like a different time frame, but I find it really freaking interesting just how stuff like this works out. I don't think these are accidents, like these are psychological levels. This is where at least institutions, like have orders sitting to like load back up. So yeah, that's the first thing that I'm looking at, and then if we look at the top, um, wait, I wanted to the downside. From where we started, like the highs until what we have today. So what we see here is the a possible retracement, which coincides with the lower cult here and the 32.24 level. That doesn't have to happen tomorrow. Doesn't have to happen by the end of the week, and perhaps we're not even done yet, and we're only retracing to the 31.80 kind of level, and then we're going lower if really everyone wants to liquidate. So just this to me would be a healthy level to retrace for more downside in the next few months. That's what I want to say. And then lastly, just from today, if you look at today's move, uh, come on, here we go. That brings that, funny enough, that brings that 31.70, 31.80 level right into play as well. So if any of you guys are long, and we managed to retrace up here and then open back up here for the regular session, I would take like a big part of my long profits here, and then just like reassess. All right, that's my thoughts on the market. Now let's look at gold. So you see, like gold is not a perfect correlated asset to the market itself. Actually, I think in general, gold is more like a market neutral play, and at least not as much a hedge play as bonds, which we see here. Like it's kind of doing its. I mean, I'm sure some of it was fueled by the market, but it's also kind of doing its own thing. It's been completely overextended and it's retracing now. So when we look at levels here, it's now over that 61.8% Fibonacci, which I love. Let's look at the longer term chart, because this is a bit of a longer term kind of play as well. We are, like also back over the bottom of this consolidation that we've had all way back, man, 2011 to 2012. So what I want to see here is like some proper consolidation, like a proper, like let me see, find an example. See, to me, this is too short. I would want to see just a few weeks/months, like where it really can confirm this level before we get like another explosive move like this. Because this is now, like it's moved quite a bit, even, like on a weekly level. So give me a few weekly candles, holding over 1600. That's when I'll be confident to long this again. I still have a few longs on. Like I have a big position in gold that's 160 days out. Where are you? I have it in GLD, that one, and not in GC. And it's only 115 days. I think when I put it on, it was 160 days. And that one I still have on. It's already completely like in the money. Like it was wide call spreads with the long call at 146 and the short call at 153. And now like we're already over that. So yeah, like that's it's just I'm gonna keep holding these. I have all the momentum lots that I told you guys about when we broke here, I've taken these off into the spikes, and now we're just, I'm just waiting for consolidation for, like a confirmation of higher levels. Next one, bonds. Damn, I'm already at 15 minutes. Bonds, it's good that we are dipping back a little bit. As I said, it would be good to see like a little bit of a curl before we break to new highs. The new highs that, or the, like we failed the previous highs here. We tried to break, we didn't go, and now with the market perhaps like rebounding just a slight bit today and then the next few days, this might give us just a little bit of fuel, a little of coiling action that could help us break out of this. And if you want to hedge, I think bonds would be a better vehicle than gold, in my opinion. Just gold is usually a bit more neutral in correlation than bonds. And lastly, not lastly, but let's just look at, if you just stick with the market for a little bit, like VVIX is, like Nikki keeps pointing that out, and I gotta admit, I did not look at this too much. I was just the VIX. I was just looking at the VIX, but I actually, having started to monitoring this, it's a really nice indicator, and it makes sometimes it makes way more sense than the VIX. So I've pointed out a few levels here. Like I saw DT posting the DEFCON levels, and I've kind of tried to color code it in a similar way here. So if we are now over, I don't know, was DEFCON 1 or something, like DEFCON 2. DEFCON 1 is like peace, right? So it's DEFCON 2, DEFCON 3, DEFCON 4, and if we get over 200, it's freaking wartime and carnage and whatever. So we are now, like over quite a bit higher in that VIX volatility than we've seen all last year. And I mean, 2018 was a bit of a nuts year, but all of last year, where the volatility was lower than what we are experiencing right now, and the volatility of the volatility. That's what this is actually. Just to not confuse you guys. And the VIX itself looks similar. We are higher than. Let's look where last year started, just to make sure I'm not telling you any bullshit. We are just, last year we were coming down from the 2018 craziness, and we are actually now over that. If you look at the 2850 was kind of the high, and we are now we touched the 30 level. Yeah, volatility is definitely back, guys, and I am loving it. I wish hindsight again, I wish I hadn't taken off that many of my VIX longs, but what can I say? I've taken profits, and it's worked out. Like, the trade was a beauty. But yeah, like, hindsight is always 2020, right? What I would also suggest to you guys, maybe not this week, but at some point, if we get like a secondary sell-off in the ES, I would suggest to you guys to looking into shorting UVXY or VXX. VXX is the 2 times leveraged one. UVXY is the triple leveraged one. VXX is more liquid. UVXY is just a bit less liquid, but it moves a fair bit more. And what you could do, let me just bring up just an example in VXX, because I don't have positions in there, so I can actually show you here. Cool. So if you look at this, what you could do, you want to give this time to work, but you can either, like, you can buy just the freaking put in here. If you want to give it more time, then you want to go out to the next expiration, say 14 in April, and like, try to probably stay within the expected move. but I feel like there's definitely some opportunity here once we are done with this, with the craziness. Once fear is subsided, volatility will contract, and it will contract hard. So now is the time to start thinking about shorts. If you don't have the buying power to, or if you want to take them at the money and you don't have the buying power, then you can do a spread like this. Um, this is basically 1-for-1 trade here. If you want to get a better risk reward, you have to move them out. That's just how this vehicle works, how this ETF works. Options. The market makers, they're not stupid, or the programs are not stupid. They're calibrated to this. So if a product like the VXX, or just like any of these volatility ETFs, if they have options, if they can trade options, they are of course pricing in the drag. So that's why if you put a spread like this at the money, this is basically a risk to make one kind of situation, just because they are pricing in the drag. So you have to go out further into the money to actually get the risk reward that all you guys want. I personally, I have no quarrel with taking one for one trades. Actually, this is even pretty good in my opinion. You take the at the money, you get more than 1-for-1, and you if it sells off, you're right in the money. So that's just an idea on how to trade this for you guys. So now, just quickly, let's go over three stocks that I'm looking at that are looking interesting to me. First off is Teva, and Teva is actually a long watch for me. I am fair bit long here, like a medium-sized position, because look how this held amid all the craziness in the market. This is unimpressed. This wants to go higher, at least for now. I mean, if the market gets too crazy, this will sell off as well. When people, start panicking, this might have another dip as well, and I will have to stop out of this position. This is not a defined risk position for me. But for now, this is holding. It's holding the upper kilt in a. How much were we down today in the market? 4% or something like that. And this is holding the upper kilt. So that is just the relative strength that I'm looking for, and hopefully tomorrow with the market bounce, this might get some legs and have like a nice big day, and hopefully break those highs until the end of the week. The next one is Facebook. Okay, there's a little bit of craziness going on with all my drawings here. I hope it makes sense. So what I'm trying to show you guys here is that we've had this trend line that came all the way from the end of last year that we are now breaking. So if we can retest that 200 level tomorrow, which is also like a big psychological level, and start failing below again, this I could imagine like to be a nice short opportunity, because there's I feel like there's a little bit of room here down to that, at least down to the 194 kind of level. And if you want to look at the Fibonacci's from all of this, then even the 185 is coming into play, but that would be like a longer term thing. It would be under the 200 and all these things. It's just if this wants to keep selling off, that might be like a nice longer term target. And lastly, Caterpillar. This one is one of the few that is not completely gone yet, but perhaps on the bounce tomorrow we could retest the lower Celt, could retest that 130 level, and then if the market does not recover, this might be a really nice short, because there's some air here. There's a gap to fill into 122. Cat is quite invested in China as well, so that stuff is gonna come through in the next few weeks, I assume. Like just that people are buying in losses, or the market is pricing in losses based on the Corona stuff. So yeah, those are the three stocks that I might be looking at right now. Um, yeah, if you have any questions, guys, let me know. I know I feel like I'm talking to about three people, but at least three people are getting some value out of this. Perhaps at some point, more people are gonna see it. Um, if you see this and you like what I'm talking about, then please like the video. Please subscribe if you're not subscribed. Um, as I keep saying every day, we are working on like some amazing stuff. I've done the math. It's going to be about 30 hours of content in the end. So there's going to be lots of great stuff coming, and 30 hours of condensed like value, not no fluff, no $500 account building challenges or something like that. No, just like real education. So I'm actually real excited for this. All right, guys, that's it from me. This has been a longer one. I didn't expect to make it this long, but I just wanted to, I guess, talk about the market a little bit and talk about what I see. Yeah, I'll see you at the open. Until then, guys, have a good one.